Very good afternoon to you, Rufus. Looking at some positivity coming through the market, we did have a number of results coming through in today's trading session, but just talk us through what your thoughts were on the market performance today.
We're seeing a bit of activity coming back into the market after 2 weeks of a bit of a flat movement, and I think with we have about a couple of stocks that will be closing books on the dividend register. So I guess that's going to spur some activity on that end. And besides the fact that we expect some activity in 2 weeks to come, in stocks like CFC, Stanbic, that also be closing its books on its dividends also. And there's also another material announcement that about Kakuzi closing a sale, basically disposing a very fundamental asset in its books, basically letting go of a major tea estate that will also likely to spur activity. So I guess going forward, we're likely to see that trend going forward, and perhaps we're going to close on the up this week.
Now, looking at Pan-African Insurance out with some positive results. 131% jump in first half pre-tax profit, really boosted by new business. Your thoughts on the type of results that came out of Pan-African Insurance, and perhaps could they continue to see such growth going forward?
Yes, I think so. In fact, the whole sector, insurance, or let's just say the whole finance sector, has really done well in the last 6 months on the basis of the dropping interest rates. I mean, in the last 6 months, we've seen a drop of over 300 basis points, and going forward, we're likely to see rates continue to come down further. So I guess just like they have stated that we've seen a revaluation upwards of their bond holdings and actually also of their equity holdings as well. So I guess going forward, with the rates coming down, we are going to see more and more unrealized profits going up, and also as rates coming down, and that in itself is going to unlock money coming into the equity markets, and that as well is going to contribute positively on the equity holdings. So I guess for the second half remaining, I see better results, both not only in the insurance sector but also in the finance sector as a whole.
Looking at Jubilee Holdings, it was also out with results in last week's trading session. When you look at Pan-African Insurance and look at Jubilee, which stock would you be putting your money into right now?
Well, I think I'm more biased towards Pan-Africa because there is an announcement that was released a few months ago about one of its major shareholders, which is basically Sanlam, that is basically stated that they would like to increase their shareholding from the 50% that they have presently to about 66% maximum that is allowed by the regulator. So I guess that is going to create a bit of demand on that particular stock. So I think I'll be more biased towards Pan-Africa.
Another company out with results was Samson Africa, posting a 62% jump in pre-tax profit. When you look at Samson Africa, is that a company that you perhaps be buying into right now?
I think this is the best time to be in Samson Africa. Look, for the last 5 years, the company has had flat sales. Its stock price has been one of the worst laggards in the in the stock exchange. But I think we are entering into a very interesting transition here with the coming in of a new managing director. But even more importantly, we are seeing the management trying to realign its strategy, not just rely entirely on the tire market, but we're seeing it. They've really they've stated they don't want to go into real estate business. Actually, they have tons of acres in form of industrial parks that they can make good use of in terms of leasing and all that. But also equally important is the fact that they'd also want to diversify their business and going into making other rubber products and not necessarily making tires, making footwear, other rubber items. I mean, I know going forward, I think as with this kind of strategy, a more diversified strategy, I think it's a safe stock to get into. At this particular price, which we think it's relatively cheaply in terms of valuation.
We've touched on the insurance sector. We did have some numbers out of the insurance sector today. We saw that the industry grew about 16% in terms of premiums. But when you look at the insurance sector and compare it to the banking sector, we have had some positive results coming out of the banking sector, with a number of banks also eyeing some rights issues. Looking at those two sectors, which sector are you perhaps preferring at this stage?
That's a good question. I think I'm more biased toward the banking sector because I think the environment really favors them, and I think there are more opportunities in the banking sector. And in terms of even the environment itself, we're talking about the ease of access towards. I mean, basically where we are at regionally as economies, we are growing, and I think there'll be more need for loans vis-a-vis insurance. And I think there's more likelihood that the banking sector is going to do well. And I'll say this for a fact, that most of these companies doing most of the firms, banking firms doing rights issue, it's basically, it tells you a lot about that sector, that there's a lot of anticipation of good growth compared to the insurance sector, that we have not seen any stock doing any rights issue or any cash call whatsoever. So I guess going forward for that particular sector, the banking sector, we're really positive about it. So far, out of the 10 stocks or 10 banks that we've seen almost 5 or 6 actually banks going for rights issue. So I think in going forward, I'm more biased towards that sector because there are so many opportunities to be reaped from there.
Well, biased towards the banking sector. That's where we have to leave it. Thank you so much for joining us, Rufus Mwanyasi. He's the investment analyst at Tsavo Securities, joining us from our studios in Nairobi.